Hello and welcome. In this guide, brought to you by the team at My Tax Accountant, we're going to untangle a really common but often confusing topic for UK families, the Granny Annexe Tax. Let's get right into it.
So you're thinking about that lovely idea, having your parents close by, safe and sound in their own little place in the garden. It's a fantastic way to keep the family together. But have you thought about the tax side of things? You know, it's often the last thing on anyone's mind, and it can come with a bit of a nasty surprise.
£19,100. Just imagine a tax bill for that much landing on your doormat, totally out of the blue. Now, this isn't some made-up number. It's a very real figure that can hit families who aren't prepared.
Yeah, that number was the shock that Sarah from Bristol got when she bought her new home. It was a mix of unexpected stamp duty and council tax, but please, don't you worry. The whole reason we're doing this is to make sure that doesn't happen to you. We've got your back.
So what we're going to do now is break down exactly what this so-called Granny Annexe Tax really means for you, using all the latest rules for the 2025-26 tax year. We're going to cut through all the jargon and give you the clear, practical info you need.
Here's a quick look at our game plan. First, we'll figure out what this tax actually is. Then we'll dive into the big three: council tax, stamp duty, and inheritance tax. After that, we'll give you a smart playbook of things you can do, and finally, show you where to get expert help. Sound good? Let's go.
Okay, Section 1. First things first. What on earth is Granny Annexe Tax? Right. The most important thing to know is that Granny Annexe Tax isn't an official government term. You won't find it on any HMRC forms. It's really just a nickname, a handy way to talk about the mix of different taxes that can pop up when you have a separate, self-contained annex on your property. So it's not one single tax, it's a bundle of them.
And that bundle is made up of three main players. You've got your council tax, that's the regular bill from your local authority. Then there's stamp duty land tax, or SDLT, the one you pay when you buy a property. And finally, the one people forget, inheritance tax, or IHT, which can sneak up years later. Each one has its own rules and its own traps.
Let's start with the council tax puzzle. This is usually the first headache families run into. The big question is, are you going to get one bill from the council or two?
The good news is, things have gotten a lot better. Before 2014, it was a real mess. You could get hit with two full council tax bills for one property. The government eventually agreed it was unfair and scrapped it. So now, for the 2025-26 tax year, you can get a full exemption, or at least a hefty 50% discount.
So, who gets to pay absolutely zero council tax on the annex? Well, this is where something called the Class W exemption comes in. It means you're totally exempt if the annex is the main home for a dependent relative. And the word dependent is key here. It means a relative who is either over 65, substantially and permanently disabled, or severely mentally impaired. If your family member fits any of those, you should be paying nothing.
And here's a fantastic pro tip for you. Take Linda from Cardiff. She managed to save £1,350 a year on her council tax. And how'd she do it? With a simple doctor's note confirming her 67-year-old mum's dependency after an operation. The big takeaway here is you have to be proactive. Don't just assume the council knows. You need to contact them and claim it.
All right, on to the next one. The stamp duty sting. This is a big one, because a major rule change in 2024 has really shaken things up, and it could cost you thousands when you buy a home with an annex.
So here's what happened. Before June 1st, 2024, there was this brilliant tax break called Multiple Dwellings Relief, or MDR. It basically lets you lower your tax bill by averaging out the value of the main house and the annex. But HMRC got rid of it, saying it was being misused. So now, in the 2025-26 tax year, you just pay the full stamp duty rate on the total price. Simple as that.
And the impact on your bank balance is huge. Let's say you're buying a £600,000 property. With the old MDR relief, your stamp duty bill would have been about £7,500. Without it, it's $17,500. That's an extra 10 grand you've suddenly got to find. Ouch.
And this is really happening to people. There's a story about a buyer in Surrey who completed their purchase just before the deadline and paid the lower rate. Their friend, Paul, bought an identical property just 2 months later and got slammed with the extra £10,000 bill. Same house, same annex, just terrible timing.
So we've looked at the upfront costs, but now we need to talk about the big one, the hidden one, the inheritance tax trap.
This is the tax that can creep up and cause some serious financial pain for your family years down the line.
Okay, there's a key phrase you need to understand: gift with reservation of benefit. I know, it sounds super technical, but the idea is actually simple. Imagine your parents give you, say, £100,000 to build an annex. That's the gift. But then they live in that annex without paying you any rent. That's the reservation of benefit. HMRC can look at that and say, well, since they're still benefiting from that money, it never really left their estate.
And why does that matter? Because of this number, 40%. That's the standard rate for inheritance tax on assets above the threshold. So if the value of that annex gets added back into your parents' estate when they pass away, it could trigger a massive and completely unexpected tax bill. All right, I know that all sounds a bit doom and gloom, but don't worry, knowledge is power. Let's switch gears and get into your smart tax playbook. These are the actionable steps you can take to protect your family's finances.
Here is your 3-step shield against that inheritance tax trap. First, if your parents helped fund the annex, consider charging them a fair market rent. It creates a formal arrangement and helps show it wasn't a gift with benefit. Second, get a legal document called a declaration of trust drawn up. It just clarifies who officially owns what share of the property. And third, if a cash gift is involved, do it early. If the person who gave the gift lives for 7 more years, it becomes completely free of inheritance tax.
So let's just pull that all together into a quick checklist for you. For council tax, be proactive and check if you can get that exemption or discount. For stamp duty, now that the relief is gone, you could use that as a bargaining chip to try and negotiate the property price down. For inheritance tax, get everything in writing and seriously think about that rental agreement. And the one pro tip that applies to everything: keep records. Seriously, a clear paper trail is your absolute best friend.
And that leads us nicely to our final section, getting expert help. Because, as you can see, this can get complicated pretty quickly, and you really don't have to try and figure it out all by yourself.
Look, navigating this web of council tax, stamp duty, and inheritance tax, it's a minefield. The rules change, and every family situation is different. Getting the right advice at the right time isn't a cost. It's an investment that can literally save you thousands, maybe even tens of thousands of pounds. And that's where getting personalized expert help from a firm like My Tax Accountant is just so valuable.
If you want to talk through your own situation, you can contact them directly. The best way is on WhatsApp or by phone, and the number is 07854 255 375. I'll say that again, that's 07854 255 375. Or you can just pop an email over to info@mytaxaccountant.co.uk.
And there we are. I really hope you found this guide helpful. The goal was to give you a bit more clarity and confidence. If you did, please do subscribe to the My Tax Accountant YouTube channel. They're always putting out more clear, practical guides just like this one. Thanks so much for watching.